Something else that we talked about that I just touched on was buy downs. And, one thing is doing a buy down at closing to buy down your rate. That is a discount point. But there's another thing that is used sometimes to help with payments is doing a temporary buy down, which I think that it's a really good way to not throw money away, but also get the benefit of a lower rate temporarily.
Let's talk about what a temporary buy down is and how you get one.
Yeah.
First, to point out that a temporary buy down is not available on every type of loan or every program. Second thing is you have to have the seller's cooperation and participation. And the way it works is, let's say your traditional rate is going to be six and a quarter. We'll just say six and a half because that's more realistic with where today's market is on a conventional loan. You're at 6.5%. That's what the rate is supposed to be. A temporary buy down, depending on what type you get, is going to give you a lower rate for the first 2 years, sometimes 3 years, depending on the program. Let's just say it's a 2 year buy down. Your rate would start at 4.5 year one. Year two, it goes to 5.5. And then after year two, it's 6.5 for the remainder of the duration of your loan. The way that the temporary buy down works is we as the lender calculate what that payment differential is from the 4.5 to the 6.5, that 2% rate difference. We figure out how much that is monthly. And then we figure out the same with the 5.5 to the 6.5. And then we add up all that payment savings for 2 years and we come up with what that number is. And then we ask the seller to pay it. Now, it's also important to point out that the seller can only contribute so much in closing costs, depending on what type of loan you're getting and how much money you're putting down, which is something that a lot of people aren't aware of. If you're just
Mhm.
doing a 5% down conventional loan, you can only get 3% in seller concessions. So if you're doing a temporary rate buy down, that's going to eat up a big chunk of that 3%, a good portion of it. You're doing a temporary rate buy down, that's going to eat up a big chunk of that 3%, a good portion of it. You're not going to have enough to cover the rest of your closing costs. So
Right.
there are a lot of things that factor in that you need to figure out or have your professionals that are working with you figure out. I don't typically pitch the temporary buy downs. If it's brought to me, great, we talk about it.